So what I'll do is I'll first of all start the session today with a small revision of the life insurance discussion that we've had, and then we'll straight away jump to the five situations. All right. So under the life insurance discussion, the first thing I had discussed with you was, in case my assessee has taken a keyman insurance policy, or if it's a ULIP, or if it's a term life insurance policy, then I'm not even discussing about it. So our discussion is about what only those life insurance policies which don't fall under these categories. Okay, so we're talking only about other life insurance policies. Then we had discussed that in case, and one more thing, we said that there are two transactions. Remember, one is every year I'm paying the premium, and the second transaction is the proceeds, the proceeds which I get upon maturity. All right, but then here we also had a discussion that whenever I get the proceeds upon maturity, generally those proceeds are exempt under section 1010D. Okay, but however, if I want the exemption under 1010D, I have to fulfill some conditions. There are some situations where I will not get the exemption. Like for example, if the policy, it all depends upon the date of policy. If the policy is taken before 1st April 2003, then there is no condition. If the policy is on or after 1st April 2003, but before 1st April 2012, then the maximum premium that I can pay is 20% of sum assured. If I've paid more than 20% of sum assured, then the maturity proceeds will be taxable for me. Are you comfortable with the dates by now? 1st April 2003, then 1st April 2012. Then if the policy is taken on or after 1st April 2012, then what's your percentage? 10% of sum assured. If your premium is more than 10% of sum assured, then I will tax your maturity proceeds. Now, if answer this question, if the premium is more than 10% of sum assured, will I tax the entire maturity proceeds? We don't know yet. We haven't done the calculation yet. Do not be under the impression that, okay, if I'm going to exceed 10%, then excess of 10% or how much. No, we don't know that yet. We just know that no exemption. If my premium is more than 10%, we just know that no 1010D exemption. We know that something is going to be taxable, but what is going to be taxable, how to compute, we have no idea about that as of now. However, if the policy is taken on or after 1st April 2013 on the life of a person who is either disabled or he's suffering from a disease, then in that case, the percentage will be 15%. Insurance premium can be up to 15% of sum assured. If it's more than 15% of sum assured, you lose your exemption. Now, answer my question. What if assessee is disabled and he's taken this life insurance policy on the life of his spouse? And spouse is not disabled. Will you still apply 15%? Does the assessee have to be disabled for 15%? No. Who has to be disabled? I've been telling you again and again, it is the insured, the person in whose name the policy is taken. That insured has to be disabled or should be suffering from a disease. Only then the 15% number applies. Okay. Now this was all existing provision. Then what was the new provision? The new provision was, if the policy is taken on or after 1st April 2023, then 10, 15, 20 all like anyways has to be fulfilled. In addition to that, I must also ensure that the aggregate premium is within 5 lakhs. If the aggregate premium exceeds 5 lakhs, then I will see which life insurance policies it's within 5 lakhs. That's going to be exempt, and the policies which are more than 5 lakhs, that's going to be taxable. Policies which are up to 5 lakhs, that's going to be exempt, and those policies where it exceeds 5 lakhs, those balance policies are going to be taxed for me. So today, if you see the remaining 5 situations that we have to do, they're going to majorly focus on the part where we have multiple policies, because single policy we've understood really well, right? Then after this, we also discussed what about the premium payment. Premium payment will go to section 80C. That part, premium payment, there is no amendment over there. Does the 5 lakh number play any role for you in the 80C discussion? No. In 80C, what matters to you? 10, 15, 20, that's all what matters to you. All right. In fact, 80C, see, in the last session, we were discussing the whole thing for the first time. So therefore, a part of it you would have understood, a part of it you wouldn't have understood. So I'm hoping everything is falling in place now. 80C, there's one more point actually. 80C, I can pay life insurance premium on whose life? Under 80C, I can pay life insurance premium on the life of myself or on the life of my spouse or on the life of my children? So answer my question. It's actually an ATC chapter 60 discussion, okay? But I'm finishing it off for you now itself. It will be much easier for us when we do chapter 60. Answer my question. I am paying life insurance premium on the life of my spouse. So who is going to claim deduction, me or my spouse? The payer. Who is paying? I am paying. I am making the payment, guys. So I'll take a deduction. So I can pay on whose life? Either on my own life, or my spouse's life, or my children's life. What if my father is paying life insurance premium on a policy on my life? My father is going to take a deduction, or am I going to take a deduction? My father is going to take a deduction. So whoever is making a payment, that person takes a deduction, and that person can pay on whose life? Either on his own life, or on the life of his spouse, or on the life of his children. Children can be major, minor, dependent, independent, married, unmarried. They may be my own children, they may be adopted children, they may be stepchildren. It doesn't matter, covering them all. Any limit on the number of children? No limit on the number of children. See, where and all have we said that there should be only 2 children? Children education allowance, remember? Children hostel allowance, leave travel concession. As of now, only 3 places you have seen. One more place you will see tuition fees. You will see in ATC in chapter 6A. One more place you will see. Only 4 places you have this 2 children limit. Other places you don't have this 2 children limit anyways. Okay. Now coming back to my discussion, what was it? Entire discussion about 5 lakh. Do you understand that? Can I straight away take you to the scenarios about that 5 lakh discussion? If the policy is taken on and after 1st April 2023, then not only should your premium be within 10, 15, 20, it should also be within 5 lakhs. But does the 5 lakh number impact my ATC discussion? No. In ATC, what do I get as a deduction? The premium payment or the proceeds? The premium payment. So whatever premium I'm paying, either on my own life or on the life of my spouse or on the life of my children, that premium I will get as a deduction under section ATC. Provided how much premium maximum I can get as a deduction? 10, 15, 20. That condition is anyways there. It depends upon when you took the policy. 10, 15, 20, that condition is anyways there. In addition to that, we also have the overall limit of 1 lakh 50. Remember, ATCCE limit of 1 lakh 50. Can both of you please listen? This is going on for quite some time. Now listen to the next discussion. We discuss it, however, if any proceeds is received upon death, then what will you do? If proceeds are received upon death, then those proceeds are going to be fully 100% exempt. This was an extremely important discussion. If proceeds are received upon death, I will not see anything else. It's going to be fully exempt. Even if the premium was more than 10%, even if the premium was more than 5 lakhs, doesn't matter. If the proceeds are received upon death, then those proceeds are fully exempt. Then we had concluded things with the help of this flow chart. Through this flow chart, what did we discuss? Through this flowchart, we said first thing we'll check, is it KMIP, ULIP or term life insurance policy? If yes, then I'm not even talking about them. I'm talking only about other life insurance policies. If it's other life insurance policies, what's the first thing you'll check? Did you receive the money upon death, or did you receive the money not related to death? If you got the money only upon death, then it's going to be fully exempt. But if you got the money not connected to death, then we'll see first of all is 10, 15, 20 fulfilled. If 10, 15, 20 is fulfilled, then only we'll think about 5 lakh. Because if 10, 15, 20 itself is not fulfilled, there itself I have an answer that I will tax the proceeds. But however, if it is more than 10, 15, 20, then what will I do? If it's within 10, 15, 20, then what will I do? Then I'll check the 5 lakh limit. But when will I check the 5 lakh limit? Only if the policy is on or after 1st April 2023. Is the entire flow chart imprinted in your mind? Yes. Shall we see the remaining 5 situations? Remaining 5 situations, try to participate as much as possible. First 5, you're all comfortable, right? Fine. Come to the 6th situation. My assessee has 3 policies, guys. He has A, B, C, 3 policies. We'll go step by step. They've given us the date of issue. They've given us the annual premium. They've given us the sum assured and consideration received upon maturity. All right. So, answer my question. What's the first thing I'll check? The first thing I'll check is it term life insurance policy? Is it ULIP or is it KMIP? No, it is none of them, which means it is any other life insurance policy. Then what's the second thing I check? Tell me. Did I receive the money upon death? Is it related to death? Question doesn't say so. Then what is the third thing I'll check? It is not related to death. So I'm in the main part of my flow chart. Here first I'll check whether the premium is within 10, 15 or 20 as the case may be. It all depends upon when the policy was taken. My assessee has three policies, guys. He has three policies A, B and C. And all the three, if you see, were they taken before 1st April 2003? No. Were they taken on and after 1st April 2003 but before 1st April 2012? No. Were they taken on and after 1st April 2012? Yes. And does the question talk about disabled or disease? Nothing of that sort. So the policy, all the three policies, if you see, they're taken on or after 1st April 2012, and therefore, what's going to be your maximum limit? Maximum limit is going to be your premium has to be within 10% of sum assured. Your limit is going to be 10%. Your premium has to be within 10% of the sum assured. Now, after this, what will you check? Is it within this 10% number or not? Now, for let's see policy A. Policy A sum assured is 10 lakh. So, what is 10% of 10 lakh? 1 lakh. So, is your annual premium within 1 lakh? Yes. For policy B, 35 lakhs, 10%, 3 lakh 50. So is it within 3 lakh 50? Yes. Policy C, 60 lakhs, 10%, 6 lakhs. Is the premium within 6 lakhs? Yes. So all the three policies, the premium is within 10, 15, 20 as the case may be. What if it was more than 10, 15, 20? Then here itself you would have said that okay, maturity proceeds are taxable. Am I talking to you about proceeds or am I talking to you about premium? I'm talking to you about proceeds. So had it been more than 10, 15, 20, right away you would have said okay, no exemption. But here it is within 10, 15, 20. So if it is within 10, 15, 20, you'll come to the last part of the chart. So there what will you check now? You will check the 5 lakh limit, but 5 lakh limit you will see only if the policy is taken on or after 1st April 2023. Here if you see, yes, it is taken on or after 1st April 2023, all the three. But however, what if it was 1st April 2022? Then what would you conclude? Here itself you would conclude that it is fully exempt, guys, because if it is before 1st April 2023, 5 lakh number irrelevant for me, and it is within 10, 15, 20, I would have said fully exempt. But here all the three policies are taken on or after 1st April 2023. So, and I have multiple policies. If I look at the aggregate premium is 10 lakh 50,000 rupees, guys. The aggregate premium is more than 5 lakhs. So when the aggregate premium is more than 5 lakhs, what do? You see which permutation or combination of policies are going to be within 5 lakhs and will also give you the least possible exemption. The highest possible exemption. So see, what are the combinations possible? Don't you think policy C will anyways be taxable, guys, because it is more than 5 lakhs? So straight away, what can I say? Only one option is available for me, policy A and B. So for policy A and B put together, if you see the premium is within 5 lakhs. So here, whatever proceeds I get later, whenever, those proceeds are going to enjoy 1010D exemption. But policy C, if you see, the premium is more than 5 lakh. So whatever proceeds you get over here, will this enjoy 1010D exemption? No. Did you understand this? See, by now, if you see, just by looking at the table itself, you would have immediately been able to arrive at the answer. But still, I've told you that because this is a slightly tricky adjustment, no matter how strong we are, we will always think about the whole process and only then we'll arrive at an answer. Same thing we do even in surcharge. Do you remember surcharge that we learned in the basic concepts chapter? No matter how well we know surcharge, we will always look at the entire sequence. So here also, if you follow the entire flow chart, it will actually be very easy for you to ensure. See, the thing is, if you follow the flow chart, there is absolutely no chance of you making a mistake. When we do a shortcut, when we resort to a shortcut, we may get a right answer, we may not get a right answer. There's no guarantee. But when we follow the whole process, the correct answer is guaranteed. Okay. So I'm hoping the sequence of thinking is getting registered in your mind. Yes, this is actually considered to be one of the worst adjustments or one of the worst amendments made by Finance Act 2023 from student point of view, because there are too many things to check. But you ensure you follow the flowchart. With flowchart, it will all be fine for you. Look at the seventh example, and this situation, I think I'll first leave it on you to do your thinking and then we will discuss. The seventh example. Think about it in the same sequence. Something slightly different is there in this question. Did you go step by step? What's your answer? X. Very good. I was expecting y'all would say only A and B. X is also exempt. Very good, guys. Why? Did you remember that? Did you check the steps? If you went through the steps, you would have seen that X is anyways before 1st April 2023. So 5 lakhs limit is anyways not going to apply. See, let me explain it to you. We'll go through the steps once again. We'll put down the steps again. Tell me what's my first step. It is not KMIP, it's not ULIP, it's not term life insurance policy. It is any other policy. Then is the money related to death of the insured? No. So therefore, I enter the main part of my chart. Now here, what do I check first? Is the premium within 10, 15 or 20? As the case may be. If you look at all the policies are taken on or after 1st April 2012. Maximum how much premium you can pay? 10% of sum assured. And all the 4 policies, if you see the policies, the premium is within 10% of sum assured. So is this fulfilled? Yes, this is fulfilled. Had this not been fulfilled, you would have said right here that the maturity amount is taxable. But no, the premium is within 10, 15, 20. Now what's the next thing you check? If the premium is within 10, 15, 20, the next thing that you check is the 5 lakh number. But the 5 lakh number you can check only for those policies which were taken on or after 1st April 2023, which means my matter of discussion is going to be only A, B, and C. So policy X, I can say this is going to be fully exempt, guys, because policy X was anyways taken before 1st April 2023, and also the premium is within 10% of sum assured. The 5 lakh number is useless for me over here. So policy X, I can say, is fully exempt because 5 lakh number irrelevant for me. But policy ABC is a 5 lakh number relevant for me. Yes. Why is it relevant for me? Because the policies were taken on or after 1st April 2023. Now, if you see the total premium is 10 lakh 50,000 of these 3 policies, 10 lakh 50,000 more than 5 lakhs. So only one combination is going to give me an exempt number, and that is policy A and B, because policy C is anyways more than 5 lakhs. Right? So therefore, policy A and B will also be enjoying 1010D exemption. But however, policy C, will I get the 1010D exemption here? No, I will not be able to enjoy. Are you clear? Yes, policy C more than 5 lakhs. So right here we can say it is going to be a taxable policy. Policy X is more than 5 lakh, no doubt. But however, the policy is taken before 1st April 2023. So 5 lakh number is irrelevant for me. Now try the 8th example. Be little careful. Are you done? There are various answers possible over here. All right. There is one academic answer and there is one practical answer. All right. Listen, I'll discuss it with you. If you look at these examples which I've brought for you, they are from ICI's statutory update. Okay. And for example, 8, they themselves give multiple answers. I will discuss both with you. All right. What's the first thing you thought about? The always sequence. Is it term life insurance policy? Is it key man insurance policy? Is it ULIP? No. First point, it is any other policy. Then did we receive the money upon death? No, it is not related to death. What's the third thing you saw? Is a premium within 10, 15 or 20 as the case may be. All the 4 policies, if you see, the policies were taken on or after 1st April 2012. So what's your limit here? 10% of sum assured. And all the policies, if you see, the premium is within 10% of sum assured. So the limit here is 10%, and yes, 10% limit is fulfilled in all the 4. Had it not been fulfilled in any of them, right there you would have said that that particular policy proceeds are taxable. But here it is within 10, 15, 20. What's the next thing you'll check? The 5 lakh number. But 5 lakh number you can check only if the policy is on or after 1st April 2023. Now, are the policies on or after 1st April 2023? Yes. If you see all the 4 policies, all the 4 are on or after 1st April 2023. Therefore, will the 5 lakh number be relevant for me? Yes, it will be. Now, there are multiple policies. So, first of all, I'll see the aggregate. Now, aggregate is clearly more than 5 lakhs. So, I will have to find that permutation or combination which gives me the best possible answer, the highest possible exemption. Now, see, over here, technically, if you see, from policy X, you got the money in 2032. From policy ABC, you will get the money only on 1st November 2033. So, which policy expired for you first? Which policy matured for you first? So coming back to the discussion, the fourth step is a 5 lakh number. Now the sum of the premiums is clearly more than 5 lakhs. Now listen to my thinking process very, very carefully. Policy X, I got money from policy X first. I got 50 lakhs in 2032 itself. So at this point of time, I would have done the first thinking of exemptions I would have done at this point of time. I received 50 lakhs, guys. At this point, I would have seen only policy X. I would have seen policy X. I would have seen, okay, premium is 4 lakh 50. Premium is within 5 lakhs. Let me enjoy the exemption. So policy X, I have already enjoyed the exemption. Then later, next year, I'm going to get from policy A, B, and C. Now tell me, when policies A, B, and C were existing, at that time was policy X also existing? Yes. So therefore, I will not ignore policy X. Even though policy X I received the money last year, was policy X existing when ABC was existing? Yes. So which means X, A, B, C, they will all go as one single bucket. I will think about them together. You cannot say that, ma'am, X anyways expired. No, we will now think about A, B, C. X already enjoyed exemption. Now A and B give me exemption. Can I say that? I cannot say that, because all the 4 policies, one single bucket. Why one single bucket? Because all the 4 policies were existing at the same time. When policy A, B, C was existing, at that time was policy X also existing? Yes, policy X was also existing. So therefore, we will have to consider policy X also. Next year, when I get the money from ABC, I will have to still consider policy X also. So policy X 4 lakh 50, I have already enjoyed. Now ABC, if you see any permutation or combination along with 4 lakh 50 is definitely going to be more than 5 lakhs. So therefore, I will enjoy the exemption only for policy X. For policy A, B, C, it is going to be taxable. I will not enjoy the exemption. This is one way of thinking. Another way of thinking is, let me say, there's one more alternative, that what if X did not enjoy policy X exemption. This is the other alternative answer, that in case X had not enjoyed the exemption in the last year, then policy A and B, you can take the exemption. But A and B, if you see, a total exemption will be how much? Only 30 lakhs, which is definitely going to be less than 50 lakhs. So is that going to be a preferred alternative? Definitely not. Are you understanding, everybody? Yes. Did you notice two different years are involved? This is going to be, see, this is going to be 2032, 32, 33, and this is going to be 33, 34. Two different years are involved, but still I am considering all the four together. Why am I considering all the four together? Because all the four policies were existing at the same time. When policy A, B, C were existing, at that time policy X was also existing. So therefore I will think about policy X also. Is everybody following? Are you understanding? Yes. So policy X, I received 50 lakhs first. This is the first event that happened. Only then I received these three policies, guys. So when I would have received 50 lakhs from policy X, that time itself I would have checked, okay, it is within 10% of sum assured. Also policy is honored after 1st April 2023. And yes, premium of policy X is within 5 lakhs. So let me enjoy exemption. So policy X 2020 in 2032, I've already enjoyed the exemption. Now next year in 33, 34, when I receive the money from A, B, C, I can't disregard the fact that last year I received money from X. I'll have to keep that also in mind, because all the four policies were existing at the same time. Getting it? Now can you please try example 9? Example 9. X and B. Very good, guys. It was very good speed of analysis as well. So what did you think? First of all, is it KMIP, ULIP, term life insurance policy? No. Was the money received upon death? No. Any other situation not related to death? Then what do you check? 10, 15, 20. Now all the policies, if you see, are taken on or after 1st April 2012. So what's going to be your applicable percentage? 10%. All the premiums, if you see, are within 10% of sum assured. So therefore, what's the next number in my mind now? 5 lakhs. But 5 lakhs I will think about only those policies which I took on or after 1st April 2023. All the four policies I took on or after 1st April 2023. All the four policies were existing simultaneously. Yes. So I will look at the aggregate. Is the aggregate more than 5 lakhs? Yes, the aggregate premium is more than 5 lakhs. Now, from which policy I would have received the money first? Policy X, I received the money in 2033 itself. A, B, C, I'm receiving only in 2034. So policy X, when I would have received in 2033, what thinking I would have done for policy X? That okay, premium is within 10% of sum assured. Also, premium of policy X is within 5 lakh, only 2 lakh 50,000. So let me enjoy the exemption. I would have enjoyed 1010D exemption. I would have enjoyed for policy X, and story over. Then next year, I would have received for policy A, B, and C. See, policy C is more than 5 lakhs. So C is definitely going to be taxable, guys, because it is more than 5 lakh, and also it is on or after 1st April 2023. So policy C is anyways going to be taxable. Now, what is my option? Policy A and B. Can I take both exemption? Can I say both put together? Anyways, premium is within 5 lakhs. I can't disregard the fact that policy X, I've taken an exemption only last year. So policy X 2 lakh 50, I've already taken an exemption. So which of the two policies will I take an exemption now? Policy A or B? See, I can take either. Either will be within 5 lakhs. But where is the maturity amount higher? B. So I would want an exemption for policy B. See, I'm indifferent. Whether I take X and A, whether I take X and B, are you listening? Whether I take X and A, whether I say X and B, the total premium is going to be within 5 lakhs only. Absolutely no doubt about that. But however, if I consider policy A and B. If I compare these two, B, the maturity amount is higher. So this is where I would want the exemption. So where will I take the exemption? Policy X and policy B, I'll take exemption. Policy A and policy C, I'll say are taxable. Got it? Can we go to one final example now? One last example. There are going to be 5 insurance policies over here. Again, be careful. The logic has to be exactly the same. Sorry, zoom it. Okay. Okay now. See, practically if you see X and Y, but academically if you see, I would say B and Y or B and A. Right? Practically you would say X and Y. But academically if you see, either Y and, I would definitely want to take B, either Y and B or A and B. I'll explain it to you. Listen to me. Can I explain it to you, please? Listen, everybody. I have to zoom out. Listen. Okay, let me keep it open. Listen to the oral discussion otherwise, if you're not able to see the numbers. So, what's the first thing I'll check? Usual process. Is it KMIP? No. Is it term life insurance policy? No. Is it KMIP, term life insurance policy, ULIP? No. Then I'll see, was the money received upon death? No. So therefore, I'll check about the 10, 15, 20 number. All the policies are taken on or after 1st April 2012. Therefore, the relevant percentage is 10%. Now, all the policies, if you see, the premium is within 10% of sum assured. Had it been more than 10%, there itself I would have said taxable. But within 10%, therefore, I will think about the 5 lakh number. But 5 lakh number, I will think only about those policies which were taken on or after 1st April 2023. All the policies, if you see, are taken on or after 1st April 2023. Therefore, I will think about the 5 lakh number. And I will think about the 5 lakh number aggregate for all the policies because all the policies were existing simultaneously. So, aggregate premium, if you see, it's clearly 5 lakhs. So I'll have to choose that combination where the premium is within 5 lakhs. Now, practically, if I see my first policy X, expired on 1st July 2033. I already received 12 lakh rupees exemption, 12 lakh rupees proceeds over here. So this would be the first time when I would be thinking about 1010D exemption. At this point of time, see, I don't know why A, B, C, how much proceeds I'm going to get, whether I'm going to get. I mean, I don't have any idea about the future right now. So right now in 2033, I will only think about policy X. Policy X, I will think that okay, it's within 10% of sum assured, and also the premium is within 5 lakhs, let me take an exemption. So 2 lakhs, I have enjoyed the exemption. Then what happened next year? In 2034, I would have received how much? I would have received 24 lakhs. Now again, I will start thinking, this is going to be the second time when I'm going to think, what will I think over here? I will think, okay, premium is within 10% of sum assured, and I can't disregard the fact that I received policy X last year, but X and Y put together, if you see, the premium is within 5 lakh only. So let me enjoy an exemption. So policy Y also you will enjoy an exemption. Then when is the next time you will think again? In 2035, together 3 policies are maturing for you. Okay, here if you see, it's within 10% of sum assured. Policy C is definitely going to be taxable because it's more than 5 lakhs. Now you will start thinking about A and B. Now A and B put together is 5 lakhs. So can I say exempt? No, I can't. I can't disregard the fact that X and Y, I have already taken 4 lakhs. I have already considered the 4 lakhs number here. Therefore, how much am I left with? Only 1 lakh. And none of the policies have a premium within 1 lakh. If I'm going to combine A or if I'm going to combine B with X and Y, it's definitely going to cross 5 lakhs. So therefore, can I take A and B over here? No. X and Y, I've already enjoyed exemption. If I take A or if I take B, the premium is going to cross 5 lakhs. So only X and Y will be exempt, but A, B, C will be taxable. All right. So this was our entire discussion regarding the 10 examples. But if I see practically, I mean, if I see academically, this discussion was a practical discussion. But academically, if you see, what would I do? Where am I getting the highest amount? 36 lakhs. I would want this to be exempt first. So I would say, okay, policy B, I am exempting. Then where is the second highest I'm getting? Y and A. And both, if you see, with 3 lakh will definitely be within 5 lakhs. So Y or A, I would say, is exempt. Both answers, practical answers and academic answers for this concept, both are allowed, because if you look at the statutory update, they have given both the answers. I would suggest to follow the practical approach that we did first, because we're used to it. That's how we've been thinking. We're used to it. So see the sequence and accordingly do it. Are we comfortable with this entire discussion? Yes. So with this, we are done with the examples, but we still have a little bit left to discuss under this insurance discussion. We are done learning about the concept of the flowchart. We've also spoken about from the point of view of chapter 6A. Now we have a few more points. This is going to be not a big burden. This is basic only. I'll show it to you one by one. Look at this. So till here, all the 10 examples I've discussed with you are coming to the GST component now. See, whenever we pay premium on life insurance policies, we have to pay 5% GST. Okay. So if I'm paying 1 lakh premium, then I'll have to pay plus 5% GST. I'll end up paying 1 lakh 5,000 is the amount I'll actually end up paying. The reason why we're discussing about premium is when you say aggregate should be within 5 lakhs. Will you take the 1 lakh number or will you take the 1 lakh 5,000 number? You will ignore the GST component and you will take the number before the GST component. Are you understanding, everybody? Yes. So the assessee, whenever he pays premium, he would have paid 5% GST. But when you're doing whatever calculations you're doing for 1010D, you will always ignore the GST component and you will take only the premium amount before the GST component. Then coming to the next discussion, term life insurance policy. Now, term life insurance policy, if you see, what exactly happens over here? In a term plan, remember I was discussing with you even in the last session, in a term plan, there is a maturity period. Now, in that maturity period, if that person dies, then the insurance company will give money. But if that person does not die, then that's all. The policy has now lapsed. Premium you've paid, gone. That's all. You are not going to get any money from insurance company at all. So, in a term life insurance policy, do you agree? If at all I'm going to get money from the insurance company, it will be only upon death. And any money I receive upon death is going to be fully exempt. So 10%, 20%, 15%, 5 lakh, none of those numbers are going to be relevant for me. That's why if you see, we kept saying not applicable to term life, not applicable to term life. From the beginning, we've been saying that. You got the logic why we've been saying that. Because any money which I receive upon death is anyways going to be exempt. It's anyways going to be fully exempt under 1010D, guys. We know that. And term life insurance policy, if at all I'm going to get money from the insurance company, it will be only upon death. So term life insurance policy, proceeds received will always be exempt. 10, 15, 20, I don't care. 5 lakh number, I don't care. All right. Then coming to key man insurance policy, this I've already told you that key man insurance policy is always going to be a taxable policy. Whatever money you receive under key man insurance policy is going to be taxable, and therefore we don't even talk about it in this entire discussion. Now comes the final part of our discussion. Now, this is important. All this while, what did we say? That if any money is received from life insurance policy, if it is exempt under 1010D, great. If it is not exempt under 1010D, something is taxable. What is taxable? I don't know. We'll see later. This is where we will learn how to compute the taxable number. So obviously, when does this discussion even come into the picture? This discussion will even come into the picture only if first of all it is taxable. Only first of all it is not 1010D exempt. Only then we will even come to this discussion. So this concept says, if you've received money which is not 1010D exempt, again I'm not talking about KMIP, I'm not talking about ULIP. You received money which is not 1010D exempt. Why am I not talking about term life insurance policy? That is anyways always going to be exempt because that money is anyways received upon death. So if you received money from a life insurance policy, not KMIP, not a term life insurance policy, not ULIP, and if it is not 1010D exempt, you'll have to find the taxable number. You will see what is the proceeds which you have received. From that, you will subtract premium. Every year you would have paid premium, you will subtract premium. But some premium you would have already subtracted in ATC every year. Are you understanding? Some premium you would have already taken deduction under ATC every year. Will I let you deduct that again? Of course not. So pure logic the finance minister has applied over here. What she says is, listen carefully. Everybody pay attention, you'll understand. Let's see, I'll give you one simple example, you'll understand. There was a life insurance policy. It was not ULIP. It was not term life insurance policy. It was also not KMIP. And when I thought about 1010D exemption, when I did the thinking about 10, 15, 20, all that thinking when I did, 5 lakh thinking, all that thinking I did, I concluded that this policy is not going to be exempt under 1010D, which means it's going to be a taxable policy. Now, this policy I took 5 years back. So for these 5 years, if you see, I have been paying a premium of 2,60,000 premium I have been paying every year. Now, this policy I had taken, let's say I had taken this policy on the 1st of April. Oh, wait, let me simplify it for you. Let's say the policy was taken on or after 1st April 2012. And the sum assured of this policy happened to be rupees 10 lakhs. Okay. And the maturity proceeds which I am now receiving from this policy is, let us say, rupees 25 lakhs. All right. So we'll go step by step again. First of all, I've already told you it is not 1010D exempt. So I've concluded it is a taxable policy. And very obvious it is taxable, guys, because see, the policy was taken on or after 1st April 2012. So maximum how much premium you can pay? 10% of sum assured. 10% of 10 lakh is only 1 lakh. But you have been paying 2 lakh 60. Every year you've been paying 2 lakh 60. Will I bother about the 5 lakh number here, by the way? No. Why not? Because a premium is more than 10% of sum assured, there itself you have concluded that it is a taxable policy. So now comes the question of computing tax. How will I start? How much proceeds I have received, guys? How much proceeds I have received? 25 lakhs proceeds I have received. From this, I'll subtract premium. See, why am I subtracting premium? Are you understanding the logic? I always tax net income, you know that? I'm receiving proceeds, but I had paid premium every year. So what's my net income, guys? Proceeds minus premium is my net cash flow. I've received proceeds. To receive proceeds, I've paid premium every year. Net number is what I will tax. So can I subtract the entire premium of 2,60,000 into 5 years? No, I can't. Because each of these 5 years, don't you think ATC deduction I would have claimed? But tell me, ATC, how much deduction I would have claimed? No prizes for fastest answer. Give me the correct answer. 1 lakh or 1,50,000? 1 lakh. I would have taken only 1 lakh ATC deduction every year. The reason is, remember, ATC is restricted to 10, 15, 20. That same 10, 15, 20 number, you have an ETC also, right? In case you've forgotten, let me show you. See, if the date of policy is on or after 1st April 2012, how much premium am I going to allow? Only 10% of sum assured I'm even going to allow for you. So here if you see, what's your sum assured? 10 lakhs. So how much premium I will allow for you under ETC? Only 1 lakh I will allow for you every year. And for how many years? For 5 years. So how much ATC deduction have you already taken? 5 lakh you have already taken. So will I let you claim this 5 lakh once again? No. Tell me what's the total premium you've paid? Total premium you've paid is 2,60,000 per year for 5 years. So total premium you've paid is 13 lakh rupees. Will I subtract full 13 lakh rupees? No. Out of 13 lakh, 5 lakhs you've already enjoyed under ATC. No. How 5 lakhs? 1 lakh every year for 5 years you would have already enjoyed. Why 1 lakh? Premium is 2,60,000, but policy is taken on or after 1st April 2012. So maximum ATC, how much you can get, guys? Only 10% of sum assured you can get. Only 10% of 10 lakh. Only 1 lakh you can get. So the premium which you have already enjoyed is 1 lakh into 5. ATC deduction you have already enjoyed. So I will not subtract 13 lakh fully. From 13 lakh, 5 lakh you have already claimed deduction. So only the balance 8 lakhs I will let you subtract. So what's going to be a taxable amount now? 25 lakhs minus 8 lakhs, the balance 17 lakhs. This is going to be your taxable proceeds. Okay, with this, we have learned the entire discussion, entire concept top to bottom over. What's going to be taxable? Proceeds minus premium. But when you're considering premium, that portion of the premium which you've already taken, deduction, that portion I will not let you subtract once again. Can I give you a small note for this? Can we write it down? Yes, what you do is, first you just put down in your notebooks, just this question alone, as it is what I've written, just this part alone write down first. Solution I will make you write down in a certain manner. Just write down the question first. Oh, you were not able to see the classroom notes. It's okay. I'm anyways re-explaining. Don't worry. Just put down this part first and then I'll put down the answer for you. The policy is not ULIP, not term life insurance policy, not KMIP. It is not 1010D exempt. The policy was taken 5 years back. For these 5 years, I've paid 2,60,000 per annum premium I've paid. Policy was taken on or after 1st April 2012. Sum assured was 10 lakhs. And now, upon maturity, I'm getting 25 lakhs. Are you done writing? Anybody still writing? Okay, I'll wait for you. Quick, please. Now listen, write down under this. I'll give you the solution. How will you take it up? Point A, as the policy proceeds are not exempt under section 1010D, proceeds minus premium will be taxed under IFOS. Proceeds minus premium will be taxed under IFOS. Next point, write down. Proceeds is equal to, what are your proceeds? 25 lakhs. What is your premium? Premium under this point C, write down premium is equal to 2,60,000 into 5, which is 13 lakhs, minus section 80C deduction, minus section 80C deduction 1 lakh into 5, which is 5 lakhs. What's your net number? 8 lakhs. In brackets, write down, as policy was taken on or after dash under section 80C only dash percentage of dash dash will be allowed as a dash, that is dash into dash percentage is equal to dash. Fill in all these blanks, please. As policy was taken on or after 1st April 2012, under ATC only 10% of, very good, sum assured will be allowed as a deduction. That is, what is sum assured? 10 lakh into 10%, which is 1 lakh. Then finally, point D, proceeds taxable under IFOS is equal to 25 lakhs minus 8 lakhs, which is 17 lakhs. Now, do you have the clarity? Yes. This is it about our discussion with respect to the biggest and the trickiest adjustment under IFOS, which was life insurance. All right. Now, you ensure that you see one more thing. If you look at the amendments PDF that I would have shared with you, the amendments PDF will contain all the examples. It will contain the whole thing. And however, the charts will be slightly different over there because those charts are purely based on what ICI has given as a statutory update. But however, what I've come to realize is you don't have to complicate it so much also. The chart that we made will be sufficient. Any question you see, the chart that we've made, you will be able to handle. Just in case you start wondering what is a complication which we did not do, what they do is they divide the whole concept into two parts, okay? They say the first part is, what if you've never received money in the past from life insurance? Basically, like the first few policies we did where we had only one single policy, they do for that a different chart altogether. And second category is those situations where I've received money in the past already, which was exempt. They call it as triple E. They call it as earlier exempt something. Earlier exempt policies or something they call it. And then they do a totally different chart for that. But that's actually not required. You can do it exactly in this way. It will be shorter, it will be simpler, and it will be much less complicated. All right. One last time, tell me, what are the things you will check? What's the first thing you'll check? Is it KMIP? Is it term life insurance policy? Or if it is ULIP? It should not be any of these. Then what will you check? It should not be received upon death. Because if it is received upon death, here itself you will say it is exempt. It should not be upon death. If it is not upon death, then what will you check? Is the premium within 10, 15, 20 as the case may be? 10, 15, 20 will depend upon what? The date of the policy. or you will check was the policy taken after you will check is a premium more than 10, 15, 20. If the premium is more than 10, 15, 20, no need to check anything else. You'll straight away say it is taxable, right guys? But if the premium is within 10, 15, 20, then what will you do? Then again you will check, is a 5 lakh number applicable or is a 5 lakh number not applicable? If the 5 lakh number is not applicable to you, not applicable means what? Policy was taken before 1st April 2023, then only 5 lakh number will not apply to you. In that case, you will say it is fully exempt. But if the 5 lakh number is applicable for you, when will it apply? Only if the policy is on or after 1st April 2023, then only 5 lakh number will first of all apply. So if the 5 lakh number is applicable, then what will you check? In that case, the aggregate premium, if it is within 5 lakh, then later the proceeds which you get will be exempt. But if the aggregate premium is more than 5 lakhs, then that combination which is within 5 lakhs, you still enjoy exemption. Remaining, you pay tax on the remaining. Are we clear with this? So this is it about our entire discussion with life insurance. Sort of confident we'll be able to handle? Yes, fine. So we'll close this discussion on life insurance here.